Waste Management, stock ticker WM, is predominantly known for one thing, and that is recession-proof cash flows. And in this video, we're going to be seeing if that is actually true and what the future outlook for this company looks like with a market rotation looming. Now, if we look at the stock over the past year, they're actually up only about 6.23%, but that doesn't really paint the whole picture, because if we zoom out a little bit more and really look at the past year and a half, in reality, they're up about 50 or 60%. So the past few years for this company have actually been quite solid. And what's actually interesting is when we look at the S&P 500 over the past month, they're actually down about 7%. That's a pretty large sell-off for the S&P 500 in a 1-month time period. But when we look at what happened to Waste Management in that same 1-month time period, it's only down about 1.3%. So we're already starting to see one of the many reasons people like Waste Management: low volatility. But there's more to it than just that. There's quite a few things we need to dig into in this video, and of course, we need to decide if Waste Management is trading at a good price at $222 per share. So let's go ahead and jump into it. Now, the first thing that I do want to do is look at Waste Management from a dividend perspective, and all this data will load in. And like always, if you'd like to download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. Now, Waste Management does have a low starting dividend yield. It's only sitting at about 1.35%, but we can also see dividend growth has kind of been at a mid-level. 10-year dividend CAGR sitting close to 7%, and the 5-year about 6.6%. So a lower starting dividend yield and decent levels of dividend growth. But again, the real reason people love this is because how predictable and stable those dividend payments are, and how they will be in the future. Now, if we look at the dividends paid out versus the free cash flow over the past few years, we can see free cash flow is easily covering those dividend payments. And this is a clear capital allocation priority for the company and something they outline in their investors presentation. Let's take a moment to look at this. Now, what we have to remember when it comes to free cash flow, there's 5 different things the company can do. They can reinvest back into the business, they can pay out dividends, attempt mergers and acquisitions, do share buybacks, or pay down debt. So they do a great job in their investors presentation of laying out their capital allocation plan. We can see what it looks like over the past 5 years and what they expect it to look like going forward. And this is really important information if you're interested in buying a stock, something you should definitely understand. And if we take a closer look at this, what we can see is, historically speaking, over the last 5 years, reinvesting back into the business has been about 10.7% of sales for the company, and moving forward, they project it to be about 9.5 to 10.5% of sales. We can see dividends. Historically, they've had close to an 8.5% compound annual dividend growth rate, and what we can see moving forward is they're targeting a 40 to 50% payout of free cash flow. Now, if we jump over to the dividend breakdown sheet, here's what we can actually see. Right now, it's sitting at about 56%, so slightly higher than they want to see it. But again, they're aiming to bring this down just a little bit. If we look at mergers and acquisitions over the past 5 years, they've invested about $5.5 billion, which is quite a bit, especially when you put this into perspective, because we can see in 2024, they produced about $2.1 billion in free cash flow, which that means over the past 5 years, they have invested years worth of free cash flow into mergers and acquisitions. And then finally, we can see they have done some share buybacks, about a 6% reduction over the last 5 years. And what they say moving forward is this will be a returns-driven approach. And that's what I love to see, because basically it means they're going to be trying to buy back stock when it's a good time, meaning when the stock is undervalued. And in most cases, that's what you're going to want to see. So we're talking about a company with a very balanced capital allocation approach, which has allowed them to grow free cash flow. It's allowed them to grow dividends and buy back shares, and also attempt mergers and acquisitions, which has been able to boost top lines. So from a capital allocation perspective, I think Waste Management is doing quite well. But that's not the only reason that people like this stock, and it's not the only reason that I personally hold this stock. Here's perhaps the most important thing you have to understand about Waste Management. They have stable, growing, and recurring revenue streams. The key word here is recurring. Take a closer look at this. If we jump over to investors' presentation they put out just a few years ago, look at this. 75% of revenue has annuity-like characteristics. 75%. This is why people claim that this company is recession-proof. The vast majority of their revenue is not susceptible to market conditions. Now, this is especially interesting obviously right now because the market is down about 10% from its all-time high, so we're technically in correction territory. And we're also seeing more and more people become bearish on the market. So it's exactly times like these when investors flock to stocks like Waste Management. I mean, we've started to see some articles talking about a potential market rotation where people are moving from tech stocks over to more stable stocks. But one of the more common concerns I've seen about Waste Management over the last few years is just how fast can they grow top lines? How fast can they grow bottom lines? Because you have to pay a premium for this business. It's trading at a forward price to earnings ratio of 29.26. Well, let's look at this company historically on our profitability spreadsheet. What we can see is the 5-year net income CAGR is actually quite good, about 10.5%. We can see earnings have been taking a nice jump year over year, and 2023 it was sitting at $5.69, and in 2024 jumped all the way up to $6.81. That's a pretty nice jump in earnings in a 1-year time period for what a lot of people would consider a slower growing company. We can also see improvements in the gross profit ratio. Top lines, revenue's grown pretty significantly since 2020, going from $15.2 billion all the way up now to about $22 billion, but to be fair, keep in mind, they did pursue some acquisitions during this time period. If we jump over to the stock screener, again, we can see revenue per share, free cash flow per share, earnings per share, all trending in the right direction. So this all looks fairly good, but what about forward-looking projections? Well, Waste Management actually released their latest quarter's earnings not too long ago. They released it in early January, and while they saw very slight misses on top and bottom lines, there was actually some pretty good news if you take a closer look into what management stated. Come down here, look at the management view. CEO Jim Fish highlighted a record year for the company with operating EBITDA growth exceeding 10% in the legacy business. That's pretty good growth, but it doesn't just stop there. They also talked about improving margins, like we just pointed out. He also pointed out that Waste Management Healthcare Solutions business is anticipated to achieve 9% organic revenue growth. Again, pretty solid growth. And then perhaps what's most impressive, the Chief Financial Officer said, "We expect operating EBITDA to grow by 15% at the midpoint of our range in 2025. She also highlighted a 17% projected increase in free cash flow to $2.725 billion in 2025. 17% free cash flow growth is typically what you would see from a high growth tech stock. So that's really good. Let's put that into comparison. $2.725 billion free cash flow. If we look at where they were in 2024, it was sitting at about 2.1. So management gave really good forward-looking guidance in this most recent earnings report. In fact, I'd say it's about as good as you could hope for if you're a shareholder like I am. So we start to understand why Waste Management is so attractive to a lot of investors right now, but again, you have to buy in at the right price. So what about Waste Management trading at this price, around $220 per share? Is it a fair price? Well, to answer that, we're going to have to jump over to my stock valuation spreadsheet and look at Waste Management. Now, I've already plugged in the stock ticker, so the data is loaded in. And one of the things that I do want to point out for this stock that I have already mentioned is lower levels of volatility. The beta is sitting at 0.76, so you're going to see lower levels of volatility, which is especially good in a downward market. Now, obviously, we really have no idea what's going to happen in the future, but that's attractive to a lot of defensive investors. Now, the first valuation we're going to look at is going to be our discounted cash flow analysis. And in the scenario, we're projecting free cash flow growth of around 12% moving forward, which may be a little bit on the aggressive side in the future years, but in the short term, it should be attainable for the company. Now, what we can see is we come to a DCF price per share of around $147, which is quite a bit lower than the current share price. Now, I'll be the first again to point out that it does deserve to trade at a premium because of the predictability of those cash flows. That's always something that we do have to take into account. Now, if we keep moving forward, let's look at the historical multiple valuation. We can see the average PE ratio for this company over the last 10 years, about 27.76, while for the trailing 12 months, it was sitting at about 32.59. So even by that standard, it still looks like it's being valued a little more of a premium than it has historically speaking. If we look at the multiples valuation, compare it to some comparable companies, they all have relatively high price to earnings multiple, but if we take the median in this example to get rid of our outlier, we come to an intrinsic value of about $242.74. Finally, if we look at them from a dividend discount model perspective, assume a dividend growth rate of 6.5%, which is right in line with what we've been seeing over the past 5 to 10 years, we come to an intrinsic value of about $213 per share, only about 4.4% off from the current share price. So when we jump over to the output tab and average these valuations together, we come to an intrinsic value of around $201 per share. So with a 10% margin of safety, our acceptable buy price would be around $180. So it looks like the difference between the current share price and the intrinsic value, again, around 11%. But what I think you'll definitely see if tech stocks, these high growth stocks, continue to sell off is Waste Management should hold its value fairly well. And what's even better news is even if we do see a little bit of a sell-off of Waste Management, two things happen. One, yes, obviously it creates opportunity, but number two, those cash flows are going to remain resilient. Again, like we've already pointed out, 75% of revenue has annuity-like characteristics. That's pretty much the best news possible with a potential bear market on the horizon. If we look at future earnings projections for this company, it's actually quite a bit better than you would expect for a company like Waste Management. We're talking about low double-digit growth. So yes, maybe Waste Management is trading at a slight premium right now, but that's exactly what I would expect with current market conditions. If we look at my personal portfolio and look at my Waste Management position, I'm currently up around 45% on this position. And while I don't plan on currently adding more to my portfolio, I'm perfectly happy continuing to hold this stock. So go ahead and let me know what you think of this company in the comments down below. And like always, if you'd like to download any of my spreadsheets and also get access to the ticker data add-on on Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.